Okay, Ari Rabinovitch joins us from the Business Center now. And Ari, we talked a lot back in the spring about that grassroots boycott of Loblaw stores. And now we're getting an idea of whether it worked.
Now, it's hard to really say for sure with direct numbers going right towards the source, but it's hard to deny that the same period that Loblaw's reported what it was dealing with the backlash from this boycott on Reddit, that it also saw a drop in sales. So the latest quarterly earnings from Loblaw & Co. did beat on profit estimates, but revenue and same-store sales lagged behind the average analyst estimate. Now, the company didn't use the word boycott, but it did suggest that these sorts of online grassroots movements against Loblaw was one of the many factors in its weaker sales. So, can't say that it didn't help Loblaw's, that's for sure. Now, Loblaw's denies any wrongdoing and recently signed into a grocer's code of conduct along with other major retailers in Canada. But the boycott, which launched in the spring on Reddit, was aimed at exposing what users felt was considered price gouging, as high inflation for food especially means higher prices for consumers, but also potentially higher profits for grocers. It's worth noting today on Bay Street, Cynthia, shares of Loblaw & Co. down 0.4%. And this is all coming in addition to the news that it ended up settling with that nearly $500 million settlement agreement.
Big news today, yes. Okay, Ari. Now, Ford is getting set to make some big investments in its Oakville production plant, but it isn't exactly smooth driving when it comes to the company's profits.
Yeah, so it is timely that we just discussed that transition at the Oakville plant, Cynthia, because Ford is basically acknowledging that electric vehicles, although it is going to be part of the pretty much the entire automotive industry to transition to electric, it's not making companies much money yet. In fact, Ford reported that it continues to lose money on electric vehicles. In fact, last quarter, it lost $1.1 billion just on electric vehicle sales. So every electric vehicle that it sells, it actually ends up losing money. But it is planning on transitioning eventually, but first, it needs to work on its bottom line to create that foundation. That's why the Oakville plant was transitioned instead of being an electric vehicle production plant to make gas-powered heavy-duty pickup trucks. And that is one of the many reasons why we keep hearing from automakers that gas-powered cars are still the way forward in terms of making these companies money. And what they say is that they'd like to use those profits to invest in making electric vehicle production more cost-effective for them.
All right, now, the Olympics begin tomorrow. Can't wait to watch the opening ceremonies. And the company that is clothing Team Canada isn't exactly posting a gold medal performance on the stock market.
Yeah, it does look good in the way the kit looks on the athletes, that's for sure, but investors do not like the way the numbers look at same stores. So sales continue to fall. It's not just Lululemon, to be fair. It's kind of a broader market sentiment for all athletic apparel brands. Companies like Nike come to mind. They're all seeing a drop in sales. Many consumers are putting off buying some of these items. And Lululemon ended up having its worst day today in about 4 years. After getting at least one analyst downgrade, the stock fell 9%. Down more than 50% so far this year. And with the Olympics just coming up tomorrow for the opening ceremony, it's just not the best timing for the company. Now, this also comes as the athletic apparel retailer halted sales of its Breeze Through product line, which was only introduced 2 weeks ago. They say they have to make adjustments, according to a spokesperson. Not sure exactly what that indicates, but it's just another red flag for Lululemon in the minds of investors, Cynthia. We'll see if it can recover after the Olympics start.
All right. Ari, as always, great to talk to you today.
You as well.
See you soon.